I'm Ann Slammond. Today I'm meeting with CPA John Rallis. Let's see what he has to say. Hi John, can you give me an overview of you and your company?
Sure. I am a certified public accountant in the state of Florida. I was licensed in April of 1993, and one of the very first things I did was establish myself with the non-resident alien community investing here in the United States, usually in rental real estate, and helping them with their U.S. tax advice and preparation needs. I am currently the shareholder of Rallis CPA. Rallis CPA has been around since 2002. Before that, I was with PricewaterhouseCoopers, a good British firm, and also had another firm with a partner in the Kissimmee resort area for 8 years. So I have experience both at the very small firm and the very large international firm level, and have been proud to serve the non-resident alien community for a long time now.
How does someone become a client of your firm?
For us to take on a non-resident alien client for tax advice and preparation, we have an interview process. It's very informal, really just an information gathering session that can be done by phone, fax, or email. And it helps us to establish a proper file for the client with their history, prior U.S. history if they have any. If they're brand new to the U.S., then that alerts us to things that we might need to advise them about on a proactive basis. So it's really quite straightforward and not too intimidating, I hope.
What are the rules and regulations concerning taxes on buying a foreign property?
We have several layers of government to deal with, unfortunately. So someone, for example, buying a rental villa in the resorts area would have to deal not only with the county for tourism tax, also they'd have to deal with the state of Florida for overall sales tax on their vacation rental income. Then we have the IRS to deal with for federal income tax purposes. Our firm typically deals only with the federal income tax part of that. We help the non-resident alien, for example, apply for their U.S. tax identification numbers. They're called ITINs. We help them with their annual income tax filing requirements. We help them also on the exit planning. For example, if they were to sell their property, there can be a withholding tax, and we help them to minimize that tax and comply with the rules however we can.
Okay, so I assume that the sales and tourism tax as well as the state taxes are paid by the property management company of that particular owner.
That is the usual rule, yes.
Okay, perfect. You just mentioned ITIN. Can you explain what it is?
The ITIN, or ITIN as we call it, is an individual tax identification number. It is required for anyone investing in the U.S. to report their federal income taxes. There is some misinformation about the use and requirement of ITINs. For example, someone might tell me, well, I need my ITIN so that my daughter can apply for financial aid when she goes to college in the U.S. That's incorrect. Someone might say, well, I need my ITIN to apply for a driver license in the U.S. That's incorrect. This is strictly a federal tax ID number so that IRS will process your income tax return. That's it. Having said that, because of, I think, perceived abuses and everyone's concerned about identity theft and security, IRS has made the ITIN application process very difficult. The application itself is not difficult, but the process is very, very inconvenient is probably a good word. So for example, if I am a investor in a rental property and my CPA tells me I need an ITIN to report my taxes, I have a few choices of how to apply for those. The usual method is for me to send in Form W-7 with a filled out income tax return. So automatically we have this time lag between my investment in the property and the time that I report my income tax could be a year later, and that would be the usual time to also apply for the ITIN. In addition to sending along Form W-7 with your income tax return, IRS also requires you to establish proof of identity. So for example, you could send your original passport with your application, which I never recommend. I've had one client do this in 26 years and it worked out for them, but I would never recommend that. Instead, IRS will also accept a certified copy of your passport. Now, I have to be careful and distinguish. This is not a notarized copy. They will reject notaries. But a certified copy, for example, if you're in the UK, you would go to the UK Passport Authority and they would issue a certified copy of your passport. That's acceptable. The other option, and this is the usual recommendation from our firm, is for the client simply to go to the IRS local office on the north side of Orlando and apply in person when they're here on holiday. That's the least inconvenient method in our experience. IRS will accept their income tax return, they'll accept the W-7, they'll examine the original unexpired passport and give it back to you. 6 or 8 weeks later, you have your ITIN. That's the least inconvenient way to get your ITIN.
Wow, there's a lot involved, but I'm assuming you can actually assist them from the beginning to the end in their
That's what we do.
Perfect. What are the costs involved in retaining your company?
As a rule, clients will pay us on an hourly basis. The hourly rate depends on whether they're dealing with the shareholder or with my associate at a lower rate. I think as a rule, it's fair to say that a 2-owner, 1 villa scenario is in the neighborhood of $375 to $500 per year. So it's not too bad.
Can you explain FIRPTA?
FIRPTA stands for Foreign Investment in Real Property Tax Act. FIRPTA is a withholding and not an actual tax, so sometimes people don't understand the difference. But for example, if I am a non-resident alien, I own U.S. real estate and I sell it. At the time of sale, depending on the sales price, the usual rule is 15% will be withheld from the closing proceeds at the time of closing. So it's 15% of the sale price, not 15% of my equity, not 15% of my tax basis in the property. It's 15% of the sale price. That amount is withheld and is a backstop against me going home and never paying my tax to the United States. So that's why FIRPTA exists. So while that 15% is pending, I will file my income tax return and tell IRS what my actual gain is, if any, what my actual tax is, if any, and any excess withheld comes back to me as a refund. So FIRPTA is not a tax, it is a withholding mechanism only, but 15% of sales price is a considerable amount from a cash flow perspective, and sometimes the time to refund is very exaggerated. So for example, if I sell my property in January, 15% is withheld. I may not file my income tax return until the following June, maybe 18 months later. And then it takes IRS another 2 months to give me my refund. So it's maybe 18 to 20 months between the time of the sale and my time to refund. That's a long time to be, first of all, without my 15%. Secondly, to be exposed to exchange rate fluctuation risk. So there is a mechanism by which we would help a client in that position to either eliminate or at least minimize the FIRPTA withholding amount. FIRPTA is always withheld at the time of closing, but we can file an application prior to closing, basically doing the tax return before we do the tax return, and tell IRS there is no reasonable possibility that the actual tax will come close to the 15% that is withheld. If IRS agrees with our application package, then the time to refund is now maybe 90 or 120 days instead of 18 to 20 months.
John, for the larger investors that are buying 10, 15 properties per, are deciding to buy this on an LLC, does this make a difference?
It makes a huge difference. There's a different world that applies to investing through entities, by which I mean there's a great deal more planning and compliance for that kind of investor. For example, if an investor were coming from the UK, we would probably advise them in conjunction with their attorneys. We'd advise them to avoid an LLC. HMRC does not like LLCs in the US. They consider them corporations, even if we don't treat them that way. And that can create a very, very nasty tax consequence to them back home. Oftentimes we recommend the use of an LLP, probably one formed in a foreign jurisdiction. It could be formed here in the US. And in that case, the investors would still have to get ITINs individually, but the entity, meaning the LLP in my example, would have to get a federal tax ID number of its own. And that's something we would help with. There's also an annual requirement for the entity to file an income tax return in addition to the individual investor. There are some rather unique, sometimes onerous withholding requirements that are manageable. You just have to know about them, know how to deal with them, and hire the right CPA to help you navigate it.
Can you explain what an LLP is?
LLP stands for Limited Liability Partnership. Most partnerships are not limited liability, so an LLP is a special kind of partnership where the partners are generally insulated from the liabilities of the other partners. So it's an asset protection feature that still enables partnership or flow-through taxation. The advantage, especially with those coming from the UK, is that an LLP is respected as a partnership, and that helps avoid really nasty double tax consequences that we might have with an LLC instead.
So can you have an LLP as an individual?
Very good question. By definition, a partnership requires more than one owner. So no, you could not be a single person and have an LLP.
What do you recommend for an individual buying multiple properties?
The LLP structure can still work if the single person may have a close friend that they would feel comfortable going into partnership with, or maybe they could form a corporation, a limited company, perhaps in their home country, and that could be the partner with them individually in the LLP. It can still work.
1031 exchange, what is it?
1031 is a section of the Internal Revenue Code that specifically allows the deferral of gain recognition until the eventual sale of the replacement property. So in layman's terms, we're kicking the tax down the road. So if you are selling your property and you don't have any gain to report, there's no sense in even exploring a 1031 exchange. It's only to defer tax if there is gain. This can be a little misleading to some because you can purchase, for example, a rental property and hold it for some period of time. And if you sell it for exactly what you paid for it, you think, well, there's no gain. But because of tax rules, there is a mandatory depreciation adjustment every year. And that gives you gain whether you realize it or not. So most of the time, our rental property investors will have taxable gain, and a 1031 like-kind exchange can make a lot of sense for them. There are some unique rules that make it not so straightforward, but with the right advice, it can really work well.
And you can help customers with that.
That is part of what we do. And done properly, you can defer the gain indefinitely.
And it is mainly when a customer wants to buy another property and transfer the funds into that other property, I would take it.
Exactly. In fact, it's not an all or nothing scenario. If you cash out of one property and invest only part of it into another property, well, then you'll recognize part of the gain and pay tax as you go. But yes, the real key, though, to a like-kind exchange is that the property has to be like-kind. And so there are some interesting rules there. You can have the same exact property in the U.S. as in a foreign country, but by definition, they are not like-kind properties. So it has to be U.S. to U.S., for example. And there are a variety of other rules, but that's the most basic one. How
does 1031 exchange work for a foreign national?
The 1031 exchange works really well for foreign nationals in that it not only defers the recognition of gain, recognition of tax from the sale, it also is an exception to the FIRPTA withholding rule. Now, it's not an automatic exception. You do have to demonstrate to IRS that the 1031 exchange applies, and IRS doesn't particularly like 1031 exchanges, so they will hold your feet to the fire on technical details. But if it's done properly, then the 1031 exchange also can avoid FIRPTA withholding, which is very nice.
Do you have any advice for a foreign national when buying an investment home in Orlando?
3 things come to mind immediately. The first one is to get a reputable management company to help you manage your property. That's indispensable. The second thing is to not forget about estate tax, meaning death tax. Sometimes our foreign national buyers aren't aware or maybe are misinformed about the application of U.S. estate tax to their situation. Sadly, this is one area where non-resident alien investors are frankly discriminated against in the Internal Revenue Code. And unless there is a treaty between the U.S. and their home country where they reside, the usual rule is that estate tax starts with after the first $60,000, 60, of taxable assets in the United States. So it's a very low threshold, and that threshold is not even indexed for inflation. So as property values rise, theoretically more and more investors are subject to this potential estate tax. There are many ways to plan for it, maybe even plan around it, depending on your home country. For example, the UK has a very beneficial estate tax treaty with the United States. So you have to know how to apply the treaty. There are some technical rules that you have to invoke, but again, done properly, it can be a very nice way to avoid some very unpleasant surprises. And then the third thing I would recommend is to make sure you have a solid team of not only the property manager, but a good CPA who understands international tax matters and an attorney who also understands international matters.
What is the best way for a client to contact you?
We are literally present 24 hours a day on the web at ralliscpa.com. And I am always in front of my email, so time differences don't really need to matter to us. We're available by fax, by phone, however is most convenient for the customer.
John, thank you so much for your time today. We really appreciate it.
Thank you. My pleasure.